The VA has asked mortgage servicers to pause foreclosures on VA guaranteed loans through May 31st, 2024. So let me give you guys some background around this. Back in March 27th, 2020, the CARES Act was signed into law, right? And we're going to talk about how it's still affecting people today and what the VA is doing to basically overcome some of the challenges that people are facing. So the CARES Act is the Coronavirus Aid, Relief, and Economic Security Act. So basically what it was intended to do was to protect borrowers that use federally backed mortgages like the VA home loan. So if a veteran experienced financial hardship directly or indirectly due to COVID, there's a couple of things that they could do, right? And for the folks out there, please drop in the comment section if you did this program. Was it beneficial? Was it not? And kind of what's happening to you today because of that. So part of the program was that you were able to enter a forbearance period of up to 180 days with the possibility of extending it another 180 days. So basically a year in a forbearance program. Now, for the forbearance, right, the servicer agrees to reduce the payment or you didn't have any payments during that time, right? And you wouldn't be considered delinquent on your credit report. But what it did do is it did prevent a lot of people from utilizing the interest rate reduction refinance loan during that period, because if you're in a modification, this is where the crazy part is, lenders considered you to be in foreclosure. Because I remember that time in the 2020-21 where rates were really low, and then people are like, well, I did a modification program. And sometimes they did it for a good reason, and sometimes they're like, well, I just wanted to skip some payments, which end up biting them in the rear because then they weren't able to do what they wanted to do. Now, your mortgage will continue. The one thing that you got to do note when people that did these is that the mortgage continued to accrue interest, but it did not accrue late fees. And that's a pretty significant piece for you to understand. And another big part of this, because I get phone calls about this all the time, and this is kind of why we do videos, right? Anytime people ask us questions, let's get information out to the veteran community. But what you have to understand is, what did you actually agree to? Was it a loan modification? Was it a repayment plan? Or was it part of the CARES Act? Those are three very different programs, how they affect your credit, right? From the CARES Act side, you're not modifying the agreement. You're just basically taking the additional funds that you had and putting them on the back end, which I'm going to explain a bit more here shortly. Now, loan modification is actually where you alter the terms of the mortgage itself, right? So either you alter the interest rate to make it more affordable. Now that changes the mortgage note, right? Do you extend the term of the mortgage from a 30-year to a 40-year to make it more affordable for yourself? Now, and again, the servicer is the only one that's going to be able to really extend that. A repayment plan is slightly different. That's where you've missed a couple of payments on your mortgage, and you and the servicer agree to a certain dollar amount to bring your mortgage. So you pay and time, right? So you pay over time, then to bring your mortgage current. Now, let's talk about some of the most common questions I get around these programs and how they actually affect your ability to use your VA home loan again. So let's run through it. Does doing a loan modification, or let's say the CARES Act, or a loan modification or a repayment plan, affect the ability to sell your home? No, it does not prevent you from selling your home, but there's a couple things that you need to know. It depends really how that whole deferment was structured, or repayment was restructured, modification, whatever you want to call it, depends on how it was structured. And nothing's free in life either, right? So either that interest that you didn't pay or the mortgage payments you did not pay are going to be tagged on to the end of the mortgage, right? So let's say, for example, you're selling your place for $400,000. And at the time you went into a modification, you had a $200,000 balance. So you've had $200,000 in equity, right? But you ran into some problems. They've deferred payments and they basically have a balance due when you sell your property. Okay. So that $200,000 might actually be $230,000 that you're going to owe on your payoff. So in that scenario, it may not be a big deal because you have the equity. But there's people out there that may not have that much equity. Now, in today's environment, I think a lot of people do. So it's really going to depend on your market and where you're at. If you're thinking about selling or you want to know where you're at with that payoff amount or where you're at with that amount, the answer is what I just said, is request a payoff from your servicer or go into your online account and make sure that you know well in advance of trying to sell a property where you stand with it. The other piece I want to tell you is 100% talk with a loan officer. You guys can always schedule a call with us. We're happy to help people across the country. Even if you're looking for a realtor, we'll connect you with agents that understand how to work with the veteran community. You need to understand all the dollar amounts that you have involved in this. And with the credit report piece from the pre-approval, they're going to determine how your mortgage actually stands or like where it stands and how you can actually get qualified to purchase your next property, which is extremely important when you're making these types of life decisions. Now let's talk about what happens if you can't financially recover from a forbearance or loan modification or repayment period for whatever reason to resume your regular mortgage payment. So you do have a couple of options, okay? You could do a regular private sale, right? You sell your home by yourself or you use a realtor to sell your property and then basically you just pay off the mortgage. You just need to make sure that you have enough equity in the property. The other way that you can do it is what's called a short sale, which still I have a lot of people asking me like, hey, I want to buy a short sale. How can I do it? Let's walk through what that is, right? A short sale is when you can't sell your property at the current amount that you owed, right? So basically a short sale, which is what it sounds like, is when you sell your home for less than what the balance is owed, okay? We really don't see that happening these days because property values in general have increased. But again, it could depend on your financial picture, where you purchased, how much the loan modification was for, how much interest was tagged on to the back end. All of that is going to be factored into how you make this decision. That's why that payoff is so important. And then talking with someone that can give you a real value for your property, not using like an online company. They are somewhat useless. The other way you can do it is what's called a deed in lieu. This is where you basically contact the servicer and say, hey, I'm not going to be making my mortgage payments anymore. I just want to sign the house over to you guys so you guys can sell it. And then the other way is actually going through a foreclosure where you basically stop making all your payments until the court orders the house to be sold, which can take anywhere from a month to 2+ years to do. And it all really depends on the state. If you had a conventional loan, it does not affect your VA home loan. If you have a VA home loan and that VA loan goes into foreclosure, including an FHA loan, now you've incurred federal debt, which can prevent you from obtaining a VA home loan. We have other videos out there on that, but I wanted to point something out for you. If you lose a property with your VA home loan, okay, and the VA can't recoup the money that you borrowed, right? So it's in a way positive. If you can recover the money, the VA gets paid all the money back and you settle up with them, you're good to go. If you don't, you're going to lock out a portion of your VA home loan benefits into that foreclosure, basically preventing you from using the entire VA home loan benefit. You'll still have a portion left, but it also depends on how much entitlement you used for that. So talk with a professional. You guys can always schedule a call with us. So let's talk about today, right? So the VA called on all mortgage servicers to pause foreclosures on VA guaranteed loans through May 31st of 2024, right? And during that pause, the VA is going to actually work with servicers on workable solutions for veterans. So this is outside of COVID, right? So if a regular veteran is starting to go through that foreclosure process, the VA has stepped in and they're asking for a solution for the veteran community. The VA, the Home Loan Guarantee, I think is one of the best government programs that's out there. Anytime we have questions, we reach out to the VA. It's pretty consistent. I think they're easy to talk with. They know what they're doing. And the best government entity I've had the pleasure of speaking with. Furthermore, they've also extended the COVID-19 refund modification program. Same thing through May 31st, 24. This is where it's going to help families keep their homes with the VA home loan. What VA is going to basically do is purchase a portion of the mortgage, creating a non-interest bearing second mortgage. And at the same time, mortgage servicers will modify the loan to make it current and work with the veteran to ensure the new payment is affordable. Just make sure that you're making that payment on time. Be realistic, set a budget, know how a budget works. We got plenty of videos on the channel talking about that. So please hit the like and subscribe button, and I'll catch you guys soon.